You know this well. I'm going to put up a quote now from your boss, as it were, Jay Clayton, who has said he basically has never seen an ICO that's not a security. He said that in Senate testimony. If he's right, and we have to assume he's right, he is your boss after all, how can the SEC not regulate it? Isn't it required to regulate it if it truly is a security?
Well, what the chairman has said, and I think he's spot on here, is that he hasn't seen an ICO yet that's not a security. And I'm in the same place. I'm not against people selling coins to build systems that people can use. It's just we have a name for that. It's a security. Now, the fact that it's a security doesn't mean they can't do it. It means they've got to follow our rules. And I think the chairman's been out in front making clear that folks who are trying to skirt our rules in this area probably aren't obeying the law.
Well, does that mean the SEC is going to impose those rules? I mean, this is going to be subject to the 33 Act, the 34 Act? How does this work?
Well, we don't have any. We only had a few particular cases before us. We haven't made any decisions on that front. But what the chairman has said, and what I'm saying, is that the structures he's seen tend to fit the definition of a security.
You have, though, stepped up enforcement crackdowns of fraud recently this year. You were telling us about this interesting fact that you announced on your own website, the ICO. Tell us a little bit about what's going on there.
Well, I'm so proud of our work in this area. You know, one of the great things about working at the SEC is getting to work with some of the best staff in government. And this week, we launched something called HoweyCoin, which was an initial coin offering that was really meant to draw in investors and get their interest, but it wasn't real. Howey is the name of the Supreme Court case that defines a security. It's a joke only a securities lawyer could love. Believe it or not, we got, in the 24 hours after we put HoweyCoin up, we got more than 100,000 hits from potential investors interested in that product. It was being discussed on Reddit. And when you clicked on it, you got taken not to a place where you could invest, but investor.gov, where we give investors tools they can use to protect themselves against fraud. And I'll tell you something. We had more hits on investor.gov in the 24 hours after we did this than we've ever had in our history.
Oh, wow. If you start cracking down, though, on these ICOs and potential fraud, always the logic comes back to, are you going to crack down on innovation? Do you buy into that argument?
Well, one thing that's interesting about this space is, in my job, it's hard to imagine what the world would look like if we didn't have an SEC. If we didn't have thousands of people protecting people from fraud across the nation, the great public servants that I work with. If you want to know what the world looks like when you don't have a robust SEC, check out the world of ICOs, because you have two things happening. First, you have people getting hurt with lots of fraud. And second, you have people who can't tell the difference between fraud and a productive investment. And for that reason, I think you're right, that we risk squelching some productive investment because we're doing all we can to protect folks from fraud. I'm hopeful that we're going to be able to come up with some path forward here where we're going to be able to show folks who want to do legitimate ICO work how they can do it consistent with our rules.
And you are clearly in favor of capital markets. You believe in capital markets. In fact, you've criticized the banks for charging too much and too regularly 7% for the smaller IPOs. Is there some tension between, on the one hand, really clamping down on ICOs, which are a way of raising capital after all, and on the other hand, saying we really want more capital raises?
Oh, I think those 2 points are really both important. So first, the speech I've given about initial public offerings is just to point out we're having a debate in this country about how do we help middle market and small company IPOs come public more often. Because, as the chairman has pointed out, we don't have as many IPOs in the middle market as we used to. Now, a lot of folks in Washington want to tell you that that's because of red tape, because of regulation. But the fact is that the amount of regulation in that space just hasn't changed that much over the last few years. The real reason, in my view, we have a problem in this area is that investment banks have been charging exactly 7% to take middle market companies public over the last few years. Not 6.5%. Not 7.5%, but 7. And in a recent speech, I called this a middle market IPO tax that we should do something about.
Which is suspicious if you're an antitrust lawyer. And there's something in the Justice Department called the Antitrust Division. That's not what you do. Can the SEC really address that problem? I mean, you don't have power directly to regulate prices, right, for investment banks, and the Antitrust Division is after antitrust. So what does the SEC have to do with this?
Well, if we are charged with regulating our public capital markets, and if it's the stated goal of our chairman to help more companies go public, I don't know how we can look at that question without thinking about this one. Now, you're right. To the degree that it's an antitrust problem, that's not my job, although I do think if it is an antitrust problem, it deserves attention from those authorities. My job is to help middle market and small companies go public. And I don't know how to do that without thinking about how much they pay when they go public, which is the reason I wanted to give that some attention.
So are you asking for more transparency here?
So in the speech that I gave, I talk a lot about how investment bankers really should have to give the companies a clear bill. And that bill ought to be disclosed when companies come public. But there's other things we can do about this, too. You know, there's been a lot of new developments about different ways companies can list, different market structures that companies can use. And one thing I've become a little concerned about is, you know, the Spotify direct listing story. More and more of these solutions are solutions for big companies. Everyone knows who Spotify is. Diligencing that IPO is not quite so hard. What I want to do is see if we can come up with some solutions for middle and small market companies.
What is the industry telling you when you lay out those plans or those ideas?
You mean my former friends in investment banking? Yeah, so I don't get invited to as many cocktail parties anymore. But I will say this. One great thing about talking to folks in the market is that they're all capitalists. And not one would tell you that charging 7% for this product, whether it's a $300 million company or a $500 million company, charging the same rate every time for 20 years, not one good capitalist will defend that as a market price.
So let's talk about the quest to have more IPOs. We've seen the government before do something for the best of all possible motivations in encouraging behavior, and it didn't go so well. People would think that happened in the mortgage business. When the idea was having everybody own their own home, that was a great idea. How'd that end up? What's the danger that you could encourage people to be doing IPOs that should not be doing IPOs?
Well, so two different questions. First, we want to be sure to protect retail investors into small IPOs. So to the degree your question is, how do we make sure those folks don't end up defrauded by small company IPOs that don't have the kinds of protections they need? That's another reason why I'm not that excited about proposals to pare back regulations on those kinds of companies. To the degree we're worried about protecting retail investors, we need to make sure that they have the disclosures and the protections that they need when they invest in a small company IPO. Now, when it comes to the company themselves, I just want to be clear about something. If a small or mid-sized company has the option to go public, they don't have to go public. It just means they have an alternative. My own view is that the more options we give those companies, the more jobs they'll create and the more our markets will grow, and that's my job.